back. You've seen hotel stocks buzzing with festive season upon us. Lemon Tree is just 10% away from its 52-week high. The company has been adding a slew of properties across the country in line with the target to get to 20,000 rooms in the next 4 years, and has also seen room rates surge over 20% from the pre-COVID levels. To discuss the demand and trends, we are now joined by Patanjali Keswani, Chairman and Managing Director at Lemon Tree Hotels. Mr. Keswani, good morning. Last time we spoke to you, you were quite bullish. But do you think that things have crossed even the best case scenario that you may have envisaged, say, 2 or 3 months back? Clearly, there's some kind of boom in the travel industry.
I don't think, firstly, good morning. I don't think we are anywhere near what I think would be boom times. That would, in my opinion, wait for another 3 to 4 months, because while foreign travel has started, meetings, incentives, there are different segments that are not at full volume yet and full demand yet. And that will take, in my opinion, as I said, 2 or 3 months. So really, it will be Q3 and Q4, which will be, well, using your word, boom times. And that the bigger issue is actually it will continue for the next 2 or 3 years, because there is really no fresh supply coming, and demand is really increasing quarter by quarter.
Okay, but what are the rates like right now? How are they trending at? Are they much higher than what they were earlier? If you can give us some numbers, what are the occupancy levels?
So occupancy levels in summer, typically every year, are about 10% lower than what they are in winter, Sonia. So they are like what would be the case every year. So actually occupancy levels are not higher than pre-COVID. They are somewhat similar. Rates are much higher. And what I want to just tell you is that the rates, I expect that there will be a 20% increase in rates in Q3 and Q4 from the current rates in the branded hotel sector. And demand will also be at least 10% higher. So if you look at it from a revenue perspective, revenue, in my opinion, should be 30 to 40% higher per room in H2 compared to H1. And I'm talking about the industry, by the way. I'm not talking about Lemon Tree.
How long do you think it would take for the occupancy levels to get back to the pre-COVID levels?
H2.
In the second half, okay.
No, it would exceed, not get to. It is already at pre-COVID levels in H1.
Okay.
Mr. Keswani, you're maintaining your sort of sense of bullishness that this will last. This momentum will last for the next couple of years. But with in a historical context, I remember you explaining to us, or maybe the time you were on before the last interaction, that rates in some marquee properties are just about getting back to where they were 20 years ago. Even after 20-year gaps, rates are still there. All that is fine, but will there be any some amount of demand destruction as well with these kind of room tariffs? It's true that there is no great supply which is coming into the market, so room inventory is not going to change materially. But even with what we have, will there be any hit on demand?
Not really, because I'll tell you why. Memory is short. In the 2 years of COVID, the regular customer of hotel rooms actually stopped visiting hotels. It was only exceptional reasons people stayed in hotels, which is why there was hardly any demand. So the customers who have come back, whether it is B2B, large corporates, or whether it is B2C, which is individuals, I think everybody has forgotten what the rates were 3 years ago. So just to answer your point, I think value is, perceived to be a function of what the market offers. And the market across the board has increased prices. So I don't agree with that. I don't think that there has been any significant level of demand destruction. Quite the contrary, I see there has been demand creation. But we are still, as I said, at pre-COVID levels of demand. And my expectation is that in H2, finally, our industry will continue on that trend line, which was still till COVID hit us, which was an increasing demand situation. And that is why I say there will be boom times for the next 3 years.
You're saying that it's going to exceed pre-COVID levels in H2. Are you factoring a bigger growth by the end of the year? I mean, you're sitting at about 400 crores of revenues in FY22. Even if you go by a, say, 30-35% growth, we're looking at about...
I said we will be more than double in revenues. You're comparing the wrong base. Our revenue before we had added a bunch of hotels way back in 2020 was close to 700 crores, 670 crores.
Yes.
Do not compare the previous year. All I said is that we will do over 800 crores, well over 800 crores this year. Okay. And to give you just some flavor, and this is not, again, I don't want to talk specifically about Lemon Tree. What I'm saying is that on a secular basis, in the last 10 years, Sonia, demand has grown at north of 10% a year for branded hotel rooms. And I'm talking in absolute numbers, okay? What happened was supply was also growing a lot, which is why the occupancy did not really go up. So what I'm seeing now is that there is no supply growth or no significant supply growth, but demand growth has gone back to its 10-12% a year. So what does that mean? It means in the next 2 years, occupancy or demand will be 20% higher than, say, now. But there will be no supply growth. So what does that mean for hotels? It means operating leverage. It means you increase prices and it goes straight to your bottom line. So here's a guess. In 2 years, all hotel companies will have double their normal EBITDA.
Okay.
Or organized branded players.
And this 800 crores, actually, if you look at it in the last, about 5 or 7 years, you haven't done that kind of, even pre-COVID, right? I mean, pre-COVID also, your best in FY20 was 700 crores, as you said. Before that, on an average, I mean, I know you've added more hotels now, etc., so that number goes up. But what would the plans be in future of adding more rooms, any kind of fresh investments that you're looking at?
Well, we are just making one single investment, which is a chunky one of about 1,000 crores, which is our big hotel in Bombay. We've invested about 400-500 crores already. Other than that, we are not looking at now investing more capital in the asset creation side. So we are investing capital now on a digital transformation, which we're undertaking, on a renovation of all our hotels. And my expectation is that we will generate enough cash that in the next 4 years, we will be debt-free and we will no longer require capital. So in fact, we are now taking capital out in the sense that we are taking, whatever we earn, we are putting to remove the debt on our books. And after that, we will simply be a dividend-paying company because I do not anticipate that we require any cash injections in the company.
The next few years, you're targeting to become debt-free. You're currently at about 1,700 crores of debt. Yeah. By the end of FY23, where will you be? And what is it by the end of FY24?
You're asking for guidance in a very clever way, Sonia. Let me put it this way. I said our EBITDA will be at least 50%. Our revenue will be at least 100% higher. So if you do the math, what I'm saying is that I need 500-600 crores to finish our Bombay hotel, maybe a couple of 100 crores to do the digital transformation and renovation, and 1,700 crores of debt. So what I have indirectly said is that put together, I need 2,500 crores of cash to write off, to pay my debt and to do all this. And I have said that within the next 4 to 5 years, at most, we will be debt-free. So I'm basically saying we will make 2,500 crores of cash in the next 5 years.
Okay. Well, it's my job to ask you for guidance cleverly, right? And thank you. Thanks for stopping by and speaking to CNBC TV 18. And taking all our questions quite well. We got a lot of data from there. Thanks a lot for being with us. So that's Lemon Tree Hotel.